Good evening, everyone. I'm Tejas Vaiti from Kirin Advisors. Welcome to the virtual roadshow of Vivid Electromech Limited. Today, we will provide a brief overview of the company and its innovative business model. Vivid Electromech Limited is an established electromechanical solutions provider with over 3 decades of experience in electrical panel manufacturing, system integration, and turnkey project execution across data centers, metro infrastructure, renewable energy, and industrial sectors. The company operates integrated manufacturing facilities and delivers end to end solutions supported by engineering capabilities, in house design expertise, and long standing relationships with leading EPC contractors and industrial clients. From the management team, we have Mr. Samir Attawar, Chairman and Managing Director of the company. Good evening, sir. Welcome.
Good evening, Tejas.
From Hem Securities Limited, we have Mr. Prabal Maheshwari, Assistant Manager. Good evening, sir. Welcome.
Good evening. Thank you for introducing me.
Now I hand over to Samir, sir, to walk us through the presentation. Over to you, sir.
Hi, good evening, everybody. This is Samir Attawar. I'm the Managing Director of Vivid Electromech Limited. So, just to give you a small brief about how we started from where we came, which is not explained on in the presentation. This company was incorporated in 1990, and operations in this company started in 1998. It was initially set up by my father, Mr. Vishwanath Attawar, and he started in the field of trading and doing execution in EPC electrical contracting. Subsequently, about 8 years back, he exited the business, and there I took over both the verticals, the manufacturing part as well as the electrical contracting EPC division. However, in about 5.5 years back, we strategically exited the EPC business to concentrate on manufacturing activities. We have two factories currently. One is in Navi Mumbai, where we call it MAPE, and another one is in Pune, in the location of Bhosri. Here we have complete in-house facilities, right from your fabrication to your pre-treatment, and further on the stage 3 assemblies, what we call as wiring and bus barring and everything. Now we are supplying to more than 15 plus states currently. We have a workforce of 235 plus. Our facilities are completely integrated. You can go to the next slide, please. Yeah. See, these are the four sectors where we are concentrating. Initially, when we started our business in the manufacturing field, our main clients were from the residential and commercial sector. Due to high competition in that sector, we decided to concentrate more on certain sectors where the project sizes are bigger as well as the bottom lines are better. We were fortunate enough about 6 years back to get involved in one of a hyperscaler data center project, where that was one of the first in our area, and we got a lot to learn in that, and it really woke up our engineering aspects. So we started concentrating more on this field, and as of today, out of the top 10, we are already servicing about 50% of them. So we are in a good space when it comes to data center and technology segment. We are basically dealing with more with hyperscalers and not that much with those small data centers. The second main core business of ours is solar and renewable, where we supply our medium voltage panels. This is a fast growing segment, as everybody knows. In this field, we are supplying to practically pan India basis, the medium voltage panels. The third, again, what we have concentrated on is your infrastructure segment, specializing in projects which have high technology and high entry barrier issues. Metros, we are doing metros underground as well as overhead metros pan India. We have executed projects and successfully metros are running on our lines, which itself is a very big and necessary PQ in our field. New entrants are hindered by this kind of what you call pre qualification in the tenders. Next slide, please. See, this is our product range. The first two are very important, and which like medium voltage constitutes roughly around 15 to 18% of our top line, and low voltage constitutes about 80%. Balance we have after sales spares and all those things, which is about 3 to 4%. Uh, but we're serving it only to our existing clients. Next. So I'll just run through a few of our quickly a few of our products. We are supplying these kind of switchboards which are intelligent, which are inbuilt with your the switch gear, as well as certain aspects of your PLCs, programming, automations, and SCADA systems. I can go to the next slide. You can just flip over. We are also manufacturing DG synchronizing panels, which are also supplied directly to end users. Also, certain DG manufacturers buy them from us to be integrated along with their DGs for project purpose. The center slide is a kind of a new entrant into the market. We started this about 2.5 years back. These are basically import substitutes for data. These are placed right before the servers. So these are used in hyperscaler data center where they want to monitor, measure individual server racks. So this is a highly complex system what we are manufacturing, which has a lot of software integration, a lot of Ethernet hardware and protocols. And next slide, please. This is our range of medium voltage. Our range starts from 3.3 kV to 33 kV, that is 33,000 volts. These are basically supplied to any kind of project requires this. However, this is installed upstream of the transformer. Next slide, please. These are some of the few variations available in the medium voltage portfolio. Next. Now, as you can see, this is our product mix year on year. Whereas, as I told you, 81% to 82% goes into our low voltage. Now, this is a totally customized product where no two single panels are alike. So it's a completely engineered and tailor-made product as per client or site specifications or requirements. Next. A rough breakup of our sectors what we are servicing are last year, the complete year, FY 24-25, about 35% is into data center and technology. About 25% goes into our infrastructure, which also includes not only our metros, but other prestigious projects what we have executed. Uh, Third, which is about 20%, is into solar and renewable projects. We are not talking about rooftop solar. We are talking about greenfield mega projects starting from minimum 2 megawatts and above. The third biggest sector, which has been our bread and butter since the last few decades, is the industrial manufacturing and machinery. What I mean by this is basically we are supplying to new factories coming up pan India, for companies from foreign who are establishing their plants here. This is again a very challenging field for us. So now others, when you're talking about the others, we are talking about mix of residential and commercial and all, where we are not focused that much because of the high competition and low ROIs. Next, please. This is just a small breakup of because of our two factories which are in Maharashtra and Pune. We do have a considerable share in the Maharashtra market. However, we intend to now start exploring south because we have been penetrating there, but we need to improve our supplies to the southern regions of India also. Next, please. Currently, we are sitting in a 34,000 square feet plant in Mumbai and another one in Pune. Here we have dedicated CNC machines and all those things available to do our complete in-house production. We are since we are catering to large MNCs, global MNCs. So we it's mandatory for us to have the all the types of ISOs and our latest IEC certifications like 61439 and 61641. We have in-house testing capabilities up to 6000 ampere. We have invested a lot in type testing as well as your in-house testing laboratories. Next, please. Currently, because of the high demand, and we are already running on a 90-95% utilization of our current facilities. So we are already in the process. About 9 months back, we started the process for expansion. Land acquisition has been done. The machines have been ordered. We should be completing the complete plant, the building, by next month end, and we intend to do our trial runs in the next 3 to 4 months. Next, please. These are some of our pictures of our current Bombay and Pune factory from the outside as well as the internal layouts. You can continue. This is our install capacity, what we are currently utilizing. So if you see last year and ours is not a very linear revenue. We are H2 very heavy, and especially our Q4 goes extremely heavy. So utilization is not averaged out in the whole year. Last year we were running at 84%. Right now we are running much more higher than that. So this is our install capacity for both the plants. Next. This is a standard manufacturing process what we follow. Since I told you it is a complete design and engineered, so we have a very strong design team with various softwares available with us for the design part. Your rest all the surface treatment, your assembly, everything is in house. We don't have to rely on external sources for price support, quality support, as well as delivery support. Next. As of 31st December, this was our order book, which we have put it on the RHP. We generally maintain the same kind of an average. This is very dynamic figure. So we always have this kind of an order book with us. Next. These are our past performances. As you can see, we are always been H2 heavy. Unfortunately, this is our the one of the drawbacks in our industry. However, we are working out a plan to make this more averaged out in the near future. Next. These are the financials. I think I'll let Mr. Prabal Maheshwari from Hem Securities to take over the financial aspect of the proposals.
Thank you, Samir sir. So, for FY25, the revenue has grown to 155 crores with a CAGR of 61% over last 2 years from 59 crores. EBITDA currently for FY25 is standing at 28.38 crores. The margins are nearly 18 to 19%. While talking about the PAT for FY25, that has grown from 6 lakhs to 4 crores, then to 20 crores in FY25. And for HY FY26, revenue is standing nearly around 70.56 crores. EBITDA is around 18-19%. that is 13.5 crores, and PAT margins for H1 FY26 are 13%. Next slide, please. While talking about the ROE and ROCE, FY25 ROE and ROCE standing 118%, 87% respectively. Net worth as on H1 FY26 September has grown to 37 crores. Next slide, please. These are some certification and memberships that company has received. Samir sir.
Yeah. This is, so as I told you, ISO is mandatory in our line. Then we have last 3 years we have been awarded consecutively the ABB Excellence Award. Next slide. These are few of the awards what we have received from our clients, including some data center clients, some big MNCs, EPC contractors. Next. This is our core team. We both are whole-time directors sitting in our New Bombay factory. Next. These are standard what we talk about the data center where we are coming from. It shows the exponential growth and the demand in our field where we are catering to the data center, especially after the Indian government passed a law that all financial data of India has to be saved in India. So till date, as per the white papers available in the market, you can also analyze that. It is 1.3 gigawatts, that is 1,300 megawatts, has been already commissioned as of last year. And there are plans to do ramp it up to about 8,000 megawatts in the coming 3 years. So currently we are seeing a huge exponential demand. That is one of the reasons we are going in for an expansion. We are expanding from 7,500 units per year to roughly a new capacity would be double of our existing capacity. Next. Just a few details more about the field what we are focusing on currently. I think we are done with the presentation.
So, if you see, company is a nearly debt-free company, and the fixed asset turnover ratio is nearly 6 to 7 times, and these are the balance sheet figures. We can move forward. So, EPS for FY25 that will be nearly around 28.9, and for previous years for FY24 and 23 they were nearly 6.11 and 0.09. Next. So company for past few years has been generated positive operating cash flow. If you see for FY25, the generated operating activity cash flow is nearly 7 crores. Next. These are some peer groups, Shivalik Power and Marine Electricals. Yes, next. So I will just quickly give a brief about the issue structure. To give you the details of issue, price band has been set at rupees 528 to 555 per share. Issue size will be rupees 130.54 crores at upper end of price band. Total number of share in issue comprised of 23 lakh 52,000 equity shares, out of which 18 lakh 84,000 equity shares as free issue, fresh issue, and 4 lakh 68,000 equity shares as offer for sale. Issue will open for subscription from tomorrow, 25th March, and will close on 30th March 2026. Bid lot will be 240 equity shares. QIB portion will comprise of 11 lakh 15,280 equity shares. NI comprise of 3 lakh 35,520 equity shares, while retail portion will comprise of 7 lakh 82,400 equity shares. Yes.
Thank you for the presentation. We'll start with the Q&A session. I request all participants to post your questions in the comment box. We have our first question from Ms. Kalyani. Can you elaborate on the key applications of your LV panels and MV panels across industries?
Any kind of industry, may it be any kind of project, may it be hospital, residential, or industry, or a data center. The power comes from outside, it goes into the transformer. So to control and protect the transformer, we have our medium voltage panels, which is placed before the transformer, and subsequently after the transformer, it goes to low voltage. So our panels handle the power. They not only distribute it, but there are protections inbuilt, safety features, and the kind of meterings and all are there to measure the power. So application wise, if you see any kind of project, there are specifications for that particular project which we meet, and the applications are developed as per those requirements.
Thank you for answering that question. Next question, please. Mr. Subodh, please tell us which end-use segments are currently driving the highest demand.
For me, for us, rather, for our industry, there are three segments which are really driving the demand, and we are also tied up with these three segments. One is the data center segment. I'm talking about hyperscalers. Second is your infrastructure, where it's, again we are specializing in metro, the metro stations pan India, and third is the renewable energy, because the government has very stiff targets to achieve. So the pressure is there for developers to put up green energy, which we are in this segment. So these three are our very focused segments.
Thank you, sir. Next question, please. Ms. Shruti, during FY25, the company's revenue increased sharply. What were the key reasons behind this growth?
Yes, as I told you, till 3 years back, we were mainly concentrating on smaller key projects like industry, residential, commercial, which we started working on the bigger hyperscaler data centers. And we were fortunate enough to bag a few big projects, long-term projects, which though bagged in 24, but the revenue was booked in FY25. So this in this there's a huge increase in revenue because of two of the sectors. One is the metro sector and the data center sector.
Thank you, sir. Next question, please. Ms. Apeksha, what are the reasons for the huge jump in EBITDA and PAT margins from FY23 to FY25?
Yes, we were always, as I have to repeat this same thing. The thing is, like we were doing residential and commercial projects where there is no entry barriers. Even small time players are allowed to compete with the large scale manufacturers. So there we were always having this bottom line problems. Second is the engineering cost. The engineering cost for a project which is worth say 25 lakhs and a project which is about 10 crores is very much similar. The engineering goes to be done for this customized product. It is pretty much the same. So then we realize, self-realization you can call it, that it is better to concentrate on larger projects, maybe with little lesser margin, then concentrate on the smaller projects. So we took a conscious call and we conscious effort from 23 to 24 and all, where we translated all our, we put a bandwidth where we are going to play ourselves. And this has really resulted in a good top line as well as a bottom line.
Thank you, sir. Next question, please. Mr. Shankar, a reason for doing OFS, what will be the promoter holding post IPO?
Yeah, this I can answer. Promoter holding by mandate, it is 75%, 74.5% or something like that. Correct me if I'm wrong, Mr. Prabal. We are diluting as minimum as possible because we are looking at a long term thing in this.
So it will be nearly 73.5 something. That will be approximately 74%.
Oh, thank you, sir. Next question, please. Mr. Niku, please give details of expansion capex of rupees 42 crore in which product segments?
Yes, okay. The land acquisition has already been done. So the debt repayment, what we have mentioned in the prospectus, it is for the land what we took a debt against land purchase. Balance 43 is for the machines. The main fabrication line we are importing from Prima Power from Finland and Italy, which itself is about 14 or something. Balance, it is the PEB structure. We are a ground plus two, we are going ahead with. So it's a very large structure and the civil foundation and everything. So this itself eats up about 75% of the 43 crores. The balance is for the small machineries, your small systems required, the electrical, the transformers and all. So those details are already mentioned in the RHP. The complete breakup is given on the 43 crores.
Okay, thank you, sir. Next question, please. Mr. Balbir, you have an order book of approx 200 crore. Can you elaborate on execution period for the same?
See, this is, as I told you, this is a dynamic number which keeps on changing. However, the standard execution for smaller projects is from the date of purchase order, it goes to 8 to 10 weeks. That includes a process of drawing approvals, advances coming in, and all. But larger projects are staggered delivery, which can go anywhere between 3 months to 6 to 7 months.
Thank you, sir. Next question, please. Mr. Raghav, capacity utilization of 70%. Why go for further expansion?
As I explained, that we don't have a linear, what you call, linear loads. We are very much Q2 heavy. So what happens when you average it out? It doesn't go to 70%. It goes much higher during the last 3 months. So it's a very skewed production schedules what we have. And secondly, the kind of requirements what we are getting, the 70% might be last year, but if you see the calculations, already 85% as of March 31st, and this currently we are doing a much higher utilization. So last 3 to 4 months we require to go roughly at with the current utilization about 110 120% of our utilization.
Thank you, sir. Next question, please. Mr. Bhaskar, can you elaborate on your associations with OEMs such as ABB, Skender Electric, and Lauritz
Good, yeah.
Knudsen, correct me if I'm wrong, including the nature of these partnerships?
Like with ABB and all, what partnership what we have is basically they call us it's a partnership for system integration, which means that they have licensed us to use their design. So as I told you, in low voltage, we have not only our design, which we are type tested at CPRI Bhopal, CPRI Bangalore, and ERDA, all our government laboratories, ERDA Baroda. We also, for certain projects, especially data centers and all, we are using the designs from ABB Switzerland, where criticalities are more, the technology requirements are higher, and the type test requirements are also higher. So this is the kind of partnership what we have with them.
Thank you, sir. Next question, please. Mr. Pavneet, about 82 to 84% of your LV panel revenue comes from ABB R2K panels. If ABB does not renew or changes this arrangement, what is your backup? Do you have alternative type tested designs ready?
Yes. As I also mentioned that we already have our designs type tested at all the three major laboratories in India. So this is last year's percentages. This year we have it is considerably lower. Our own designs have started moving into the market. So we should be substantially lower this year.
Okay, sir. Thank you. Next question, please. Mr. Jaspreet, since most of your revenue comes from the domestic market, could you share your plans and strategy to gradually expand your presence?
Yes, because of the new IEC norms, the type test required. The IEC is common for Europe. It is common for India and for the African market. Our products have started moving in the current financial. Have started moving to a lot of African countries and also to the little bit of Latin American countries. So a few more certifications we need to get to increase our portfolio in these segments.
Thank you, sir. Next question, please. Mr. Deepu, what is the bid pipeline for next 12 months?
It is all I can say in this matter is we have bidded for a lot of projects, and so this. Probably correct me if I'm wrong. Can I answer this question?
Since it is not mentioned in RHP, so anything related to future questions for the company will avoid the same.
Okay.
Sorry for
Can we
that.
have our next question, please? Mr. Sandeep, what does one unit in your 7,500 units capacity refer to? A full panel, a cubicle, or something else? Also, what is your current capacity utilization?
See, to average out our production capacity, we consider 7,000 units as a one vertical. That vertical could be 700 width, costing about minimum 2 lakhs, and it can go up to 1,300 width with a standard height of say 2 meters or something, which can go up to about even 9 to 10 lakhs. So it is very difficult for us to calculate a capacity, but this is a generalized terms of verticals, what we call. So it's called one cubicle or one enclosure or one standing unit. And what is the current capacity utilization as of March this year? We are at practically running at 100% right now because these are the last few fag end days of the production year.
Thank you, sir. Next question, please. Mr. Sudhir, your largest customer contributes about 30 to 32% of revenue. Are they a data center developer, EPC contractor, or industrial group? Do they work with multiple vendors, or are you their sole supplier?
Ah, okay, the largest contributor as per the RHP is about 30% that as of last year. This particular customer is a hyperscaler. We are working directly with them, and this is not for one particular project. This is multiple projects spread across the region. And yes, they do have multiple vendors. It's not too many vendors, but yes, it's a handful of vendors is there. We are not their sole suppliers.
Okay, thank you, sir. Next question, please. Mr. Jayesh, who are your comparable peers? Who are the key competitors in your business, including major domestic players?
As mentioned in the RHP, so there was one particular competitor mentioned in the RHP. So though, they are there, but unfortunately I can't name names. So there are 3 or 4 players. When it comes to data center segment, there are about 4 to 5 players who are catering to this industry on a regular basis. When it comes to underground metros, again there are hardly about 7 to 8 players pan India who are catering or rather who are pre-qualified for such kind of projects. So it is a niche segment, and it is not a segment where there is too much of saturation, as compared to your segments like your residential, commercial, where there are hundreds of manufacturers.
Thank you, sir. Next question, please. Mr. Lakshmikant, your PAT and EBITDA margins has grown vertically in FY25 versus FY24. What factors have led to this stupendous growth? Also, can you throw some light on structural changes you plan to bring to our biz?
Okay, the PAT and EBITDA both have increased. Is basically the selection of projects. We had a good consultant who advised us not to take certain projects above below a certain value. So we started implementing those plans. Secondly, selection of the sectors where we want to play, where there is very less competition. And secondly, when we started scaling up, our fixed costs remain the same. For the fixed cost was practically the same when it was at 95 CR top line, and it was marginally it increased when it was at 155 CR. So that has given us a big edge in the EBITDA. Third major reason was the economies of scale. We could negotiate better with our vendor when our volumes went up. We could get favorable supplies for because of the volumes. So this has led in this stupendous growth, as mentioned by you. Also, structural changes. What we intend to bring is all forward-looking plans we have. We have consultants on board who have advised us certain things to implement, like somebody suggested, and we are looking into that for the increasing our export business, doing some few more type tests to be where we are our markets availability grows. So there are certain things in the pipeline.
Thank you, sir. Next question, please. Mr. Ravi, how much of revenue is repeat versus new customers?
It's roughly a 60/40 ratio. Now, we consider repeat orders as customers like EPCs. They are repeat customers. They are doing n number of projects, and they keep on giving us the repeat projects. There are hyperscalers who have again number of projects. These all be branded into repeat customers. Brand new customers, roughly about 40%. These are direct industrial customers who come to us once in 2, 3 years, 4 years, 5 years for their new plant requirements. So it's a 60/40 kind of a ratio.
Thank you, sir. Next question, please. Ms. Vaidehi, what is the win ratio in tender-based business?
Now we will divide for us the data center and metro projects where we quote for. We don't do any tender base for the government, but these all our tenders are basically from the private players. So there we have a ratio of roughly around 60 70% of a win ratio. But when it comes to the smaller projects, the industry segment or so there we have a ratio of roughly around 30%.
Thank you, sir. Next question, please. Mr. Naman, could you please share details of your key customers?
Unfortunately, I would love to because that does a lot of things for me, but I'm not allowed to do it because it's not mentioned in the RHP.
Can we have our next question, please? Mr. Sanjay, what drives EBITDA margin, product mix, or execution efficiency?
It is both. Both are a key factors. Like I told you, certain projects where we say 70% of our business is only the supply part. When it comes to metros or industries or any other project, we are only supplying the material. It is installed by the EPC contractor or third party, not under us. We only have to supervise the commissioning part of it. But when it comes to data centers and certain few critical installations, there the complete EPC is with us. Not only we have to supply, install it, commission it, also be available on site to conduct the complete testing during the IST.
Thank you, sir. Next question, please. Ms. Apeksha, how would you manage order cancellation risk?
See, we do take advances from all our clients, majority of our clients. The only people who are not giving us advances are our clients who have been with us since quite some time. So, and generally in our line, once we get the purchase order, the advances are released after drawing approval. So, till drawing approval, it is an effort to get the engineering done. But procurement, manufacturing starts after receipt of manufacturing clearance and after receipt of advance. So, order cancellation risks are very rare in our line.
Thank you, sir. Next question, please. Mr. Lakshmikant, you are allocating the largest portion of the fresh issue to a new unit. What is the expected incremental revenue capacity this new plant will add?
Yeah, as I told, the current capacity is 7,500 units, in which we are reaching last year we reached 155 by doing 6,500 units we did last year roughly, and we did 155 CR. The new capacity would enhance our capacity, including the old capacity and the new expansion, to roughly 20 to 23,000, 21,500 something units. That's a 3x kind of a thing.
Thank you. Next question, please. Mr. Mukesh, in what way you differentiate from unorganized EPC players?
Firstly, I would not call myself a EPC player. We are purely manufacturers. Certain segments we are doing the EPC because that segment requires us to do the installation of our product. We don't do EPC like for any other product. What is manufactured by us is installed by us. So in this segment, there are no unorganized, manufacturers who are able to do these kind of projects of scale.
Thank you. Next question, please. Mr. Arab, are you competing on price or technical capability?
Both actually. Certain projects where the technical requirements are stringent. So generally, we majority of the projects that there's a rating given first as a T1, T2, T3. So only once when you clear the technical part, then it comes to the price part.
Thank you. Next question, please. Deepu, how does working capital scale with growth?
I don't understand the question, but let me take a shot at it. We are allocating roughly around 36 crores to the working capital requirement. Does that answer your question?
Also, I would like to mention for if they want to understand working capital cycle. So for debtors, it will be around 109, 110 days. For inventory, it will be nearly 50 days. And for the creditors part, it will be around 114 days. So complete working capital cycle will be around 40, 45 days. So that's all.
Thank you, sir. Next question, please. Mr. Pradnesh, how sensitive are margins to copper prices and steel prices?
Okay, when it comes to copper prices, out of the switchboards what we manufacture, only 15 to 20% require copper. In the sense, majority of our project are with aluminum bus bars. Few projects, 10 to 15% of the projects are with copper prices. There is a sensitivity, but to the copper prices because that corresponds to our raw material cost. However, copper in that 15% of the projects what we do, copper content of the project value is not more than 10 to 12%. So even if there is a spike in it, we can easily absorb it in our margins. Now steel is a it's a very small percentage of our sale price. The total fabrication, I'm talking about the enclosure cost, is not is less than 10% of a complete switchboard, and steel constitutes 25% of the enclosure cost. So overall, if you go to see, steel prices are negligible for us.
Thank you, sir. Next question, please. Ms. Vaidehi, can margins stay at this level going forward?
I don't see a reason why not. The reason we are also expanding so heavily and so fast is we want to capitalize on the kind of inquiry levels what we have, the kind of requirements, pressure from customers to take bigger orders. So our engineering costs remain the same. Our top line seems to be increasing exponentially. So I don't see a reason why margins have to fall.
Thank you, sir. Next question, please. Mr. Pavan, any risk from partner dependency, please elaborate.
I'm assuming that when you're talking about a partner where we have a partnership or system integratorship, yes, there is a dependency of technical guidance and certain approvals, but there is no risk as such because it's a win-win situation for both of us. So we don't find there that is a dependency as such.
Thank you, sir. Next question, please. CapEx plans post IPO.
Capex, the IPO proceeds, majority of the IPO proceeds are allocated for capex expansion only. We could not delay our expansion because of tremendous orders inflow. So we already started doing our capex expansion, and about 10 to 15% of the IPO proceeds will be going for the debt incurred to expand our capex, as well as directly to the capex machinery purchases and other things.
Thank you, sir. Next question, please. Mr. Yash, how will working capital infusion improve the cash conversion cycle and execution capability?
Prabhalji, could you take this on question?
So basically, with the infusion of this working capital, the working capital cycle is nearly 45 days. So going forward, more orders will be undertaken by the company and execution capability. So talking about the execution capability, this is the business which needs means more experience is needed for making the IP. So going forward with this infusion, the amount of revenue that will scale up will be nearly 3x. So the also the capacity that the currently company is doing 7,500, that will also increase to three times.
Thank you, sir. Next question, please. Mr. Gopur, top 10 customers account for approx 57% of our revenues. How does a company plan to reduce the risk of concentration here?
This was highlighted during this complete process of the IPO, the due diligence. This came up as one of the risk factors last year. We have been striving to get the top 10 customer base to less than 45%. That's our initial target, and we hope to achieve it in the near future.
Thank you, sir. Next question, please. Mr. Amitabh, looking forward to the IPO. All the very best with IPO. So I think we have covered majority of the questions. So thank you, Sameer sir. Thank you, Prabal sir. Thank you, and all the best for the IPO.
Thank you, Tejas ji. Thank you, Prabal.
Thank you, sir. Thank you everyone for joining this call.
Thank you.